Hi everyone, welcome back to Corporate Decoder, the place where we dig through the documents so you don't have to. Today we're looking at a filing from Icon plc, a company that helps drug companies run their clinical trials. Prepare for a financial rollercoaster because this report has some unexpected turns. Let's hope it doesn't get too bumpy. By the way, if you like getting straight insights from company filings, make sure to subscribe and join our Discord community linked in the description. Accession, that's ICON, is letting us know what's been going on in their business as a foreign company selling stock in the United States. This is a Form 6K. Think of it like a quick update. They're talking about what happened in April 2025. Accession provides services to pharmaceutical, biotechnology, medical device companies, and even government health organizations. Basically, they help these groups with the work needed to create new drugs and medical products. They manage the whole process from the initial planning to testing and analyzing the data. They even do things like help pick the best compounds for development. They consider themselves one of the few CROs, contract research organizations, that can do clinical trials, that is, the work to test new drugs on a global basis. At the end of March 2025, Icon had about 41,250 employees, working in almost 100 locations, spread across 55 countries. Most of Icon's revenue came from the United States and Europe. One thing to note is a share repurchase program, also known as a buyback. In February, Icon said they would buy back up to $750 million of their own stock, on top of 250 million shares for 250 million shares for $250 million that was already approved. In March, they bought back a little over 1.3 million shares for 250 million shares for $250 million. At the end of March, they still had the green light to repurchase $750 million worth of shares. Once repurchased, these shares are cancelled. There's also an update on a vaccine study, the large-scale next-generation COVID vaccine study, which Icon thought was moving forward as planned, has been delayed by the company sponsoring the work. They initially expected a 90-day delay, however, they recently got news that it may resume sooner. A development to keep an eye on: the US government announced new tariffs, which are taxes on imported goods that could impact Icon's business. Further economic uncertainty, perhaps even a global recession, could have an impact on revenue, operations, and how profitable they are. A large amount of their subsidiaries' local results are reported in currencies other than the US dollar. Also, contracts are sometimes priced in other currencies than the US dollar. Finally, expenses are mostly paid in the local currencies of their global operations. Accordingly, changes in exchange rates between the US dollar and those other currencies can impact the company's financial results. Now let's jump into the numbers. A balance sheet shows what a company owns, assets, and what it owes, liabilities, at a specific point in time. We're looking at a simplified version here. Accession had about $526 million in cash. This is the money they can use right away, down a bit from about $538 million at the end of last year, 2024. Accounts receivable are basically IOUs from their customers, and they have about $1.38 billion of that amount. Goodwill, a number that companies sometimes overpay, is about $9 billion. Accounts payable are what Icon owes to its suppliers, about $118 million. This is significantly lower than the almost $173 million at the end of last year. Unearned revenue is over $1.49 billion. This is basically cash collected in advance for services Icon hasn't yet provided. Overall, total liabilities, the amount they owe, came in at $7.2 billion. Retained earnings, which is the company's accumulated profits that have not been paid out to shareholders, were $2.6 billion. Total liabilities and shareholder equity came in at $16.7 billion. Now, let's check the statement of operations, which shows how profitable the business is, the famous profit and loss. Accession's revenue for the 3 months ended in March was $2 billion. This is actually down from $2.09 billion in the same period last year. Direct costs, the expenses directly related to providing their services, were $1.44 billion. Selling, general, and administrative expenses, which covers things like marketing and salaries, were $198 million. Depreciation and amortization, which accounts for the decline in value of their assets, was almost $96 million. After all the expenses, Icon's net income, think of it as take-home pay, was $154 million. Net income per share, which is how much profit is allocated to each share of stock, was $1.91 on a basic level and $1.91 on a diluted level. These figures were down from $2.20 a year prior. The statement of comprehensive income provides additional financial gains and losses that are not included in the P&L, such as gains and losses from currency translation. Ik An's net income, as we know, was $154 million. The currency translation adjustment, which measures the impact of changes in exchange rates, was a positive $59.1 million. Total comprehensive income was $210 million. Next, let's look at the statement of shareholder equity. This statement shows the change in value of the owners of the company. Starting at the end of 2024, we see over 80 million ordinary shares. Total comprehensive income was $210.8 million. A key element, they bought back shares. This lowered the total outstanding shares in return for $250 million in expenses. Ending at March 31, 25, the ordinary shares decreased to 79.4 million ordinary shares. The cash flow statement details the movement of cash both into and out of the company, starting with a net income of $154 million. Adding back depreciation and amortization expense of $95.9 million, accounts receivable saw a negative $9.7 million impact. The net cash provided by operating activities totaled $268.2 million. Net cash used in investing activities totaled $37.3 million. And net cash used in financing activities totaled $252.8 million. Net decrease in cash and cash equivalents totaled a little over $12 million, ending the period with $526.66 million cash and equivalents. A couple of notes, these financial statements are not audited, so these are unaudited results. The policy section goes over the 5-step revenue calculation and how they account for things. Ik An's revenue comes from clinical trials, laboratory, consulting, and data services. As of March, about $15.5 billion of revenue is expected to be recognized in the future from existing contracts. They expect to recognize almost half of this revenue in the next 12 months, with the rest coming in later years. Goodwill decreased to $9 billion due to currency movements. Intangible assets were about $3.5 billion. The fair value is the price they would get if they sold an asset. They incurred $39.29 and restructuring charges, mainly due to laying off people. They also have operating leases, which are basically rental agreements that cost them $10.4 million. Ik An has a mix of debt, including term loans and secured notes, totaling $3.4 billion. Their income tax expense was about $19.6 million. Net income per ordinary share, as we know, was $1.01 on a basic level. They spent $12.20 and touche, and which are ways that a company gives its employees stock as part of their overall compensation plan. In repurchased 1,360,537 shares for $250 million. ICSI operates as one single segment, the provision of outsourced development services on a global basis to the pharmaceutical, biotechnology, and medical devices industries. Finally, there were no significant events that occurred after the period end to take you. Now, what's the story here? Icon's revenue took a bit of a dip and their expenses are causing a bit of a squeeze on their profitability. This is something to look out for going forward, especially if they can't get the COVID vaccine study back on track. It appears that they have about $720 million in cash ready to use, so they are liquid enough for now. However, the recent volatility in the broader clinical development market could result in revenue for the next quarter to be even lower. Additionally, if they are not able to minimize their costs, they may become unprofitable. Okay, that's our breakdown of Icon's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.